For the upcoming week, the US dollar might even crash or go up very significantly because we are in a turning point of what the Fed is going to decide for the upcoming months ahead. In this video, I'm trying to explain the fundamentals behind what's happening in the major currencies market, especially focusing on United States of dollar. The US Fed situation is pretty complicated than you think it is. The US Federal Reserve has two mandates. The first is inflation, controlling inflation. The second is having maximum employment. In the upcoming weeks, we're about to see the most significant move on the US dollars, especially on the major currencies and of course US stock market. And let me try to explain to you in the most friendly way possible what is going on in the market. And I'll try to be as very easy as possible. If you got any questions, comment down below and I'll try to answer those questions. Not only that, I'm not a financial expert, I'm not giving you a financial advice, but I'll try to bring as much as fundamental analysis as I know to you guys. And first, US dollar is on pressure due to two things. The US Federal Reserve, the one who manages the interest rate, is in a very particular situation right now due to two things. Both mandates are in trouble. The first one is inflation. The Federal Reserve wants to keep inflation controlled. The second one, he wants to employ as much people as he can into the workforce, which means less unemployment and less higher inflation. Don't forget that. And in this situation, the Federal Reserve is seeing some weakness in the jobs market, which means less people are getting employed. There's a cracking system of that market, and the Fed is not really happy with that. Also, the inflation is generally cooling down. They want 2.6%, and they want 2%, and the inflation is about 2.6 now. Don't worry, it's trending down, but they don't want to cut it right away. Why is a good question? Because if you cut interest rate now, it will ignite back inflation up because it's cheaper to borrow money and spend. The more you spend, the more inflation it is because it's a simple economics. If you want to explain that to you, please drop down in the comments and I will make a full series on explaining how the fundamentals work. But back to the reality. So the job market is really showing some cracks, and also the inflation is not on the target. Don't forget, Trump's tariff is still on the game. That thing is more expected to be like one-time thing, but the Fed is cautious because it doesn't want it to that outblown effect, that continuous inflation that started from, the Trump's tariff. So they want to control that, and they don't want the job market to collapse. So they have to time it effectively to control that, to balance that. See? Even Jerome Paul saying, we're not against cut, we just want to cut effectively. That's his word. He says he wants to cut the rate effectively. So the cut is coming. Everybody knows because it's quite high, the interest rate, 4.5%. But when it's gonna cut is really matters. They don't want to ignite inflation back. They do not want the labor market go destroyed and the thing follows. So there are two sides of it. There are pro-cut side and there are anti-cut side. So the pro-cut side says the labor market is showing weakness. We need a rate cut. So businesses will employ more because it's cheaper to find money. So they will employ more workers. That's their logic behind it. The second one, which is quite as important as the first one, inflation is cooling. We don't have to wait. If inflation is cooling, we can cut now and we can have a boom. Consumer credit is getting really stressed, okay? Even though the Fed, Jerome Paul said the credit cards, he had a talk with creditors, and they didn't have any significant risks on that. But the data is showing some strangeness, and the lower income family is really feeling that, and they don't want to turn that into recession, all-blown recession. And also, Trump is in the pro-cut side. There's a big geopolitical thing I can express about you, the guys. But to make it very easy for you to understand, Trump wants this cut really badly. He wants it so bad, he wants to fire Jerome. That's how bad Trump wants this cut. And there are so many reasons. And if you want me to make you that video, just don't feel free. Open the comment section. You can even roast me if you wanted to. Let's have some fun on there, okay? On no cut side, there are some pretty significant reasons. Even though there's no cut side is only 20%, according to investing.com, about close to 80% are expecting September cut, and 20% are not even expecting a September rate cut. There is a divergence. See? And also, for no cut sides, the reason is the GDP is robust growth. Inflation is still above the target. It's 2.6. They want in 2%. That is really a reason for them to call. And also the geopolitical tension. They do not want to ignite the inflation back. And they want to know the upcoming CPI data. It is so crucial. The upcoming CPI data, the upcoming unemployment data. Also, on Thursday next week, there will be very, very important data coming up about unemployment claims, weekly data on Thursday. If that is showing really weakness, the September cut is gonna have increased probability. So Thursday, mark your calendars, look at that unemployment claim. So what do we expect on the upcoming week? In the upcoming week, I expect a weaker dollar till Thursday. Thursday is a key point. You have to understand, guys. Till Thursday, I expect the dollar go weak against the major currencies. Gold will significantly benefit because Trump he wants some trouble, I guess. I don't know why he wants that kind of trouble. But yeah, Trump and the war with Russia, India, they are geopolitics. And I feel like that's gonna still stick up to the gold all-time highness. And also the expected value of September cut is pretty high. So the market's gonna price itself to that extent. Till Thursday, I would expect most likely the US dollar will show some downward movement. The next CPI data is going to be very, very crucial. And I will keep you updated, guys, on the next week. If you got any kind of question, just comment down below. I will do my best to actually answer this. And if you want any kind of trading related content for me to produce to you guys, feel free. The comment section is up there. And I will see you on the next video.